Hello viewers, hello traders, and hello clients. I guess that should be the intro by now. So nice to see you again, Gabriel around, and I just want to go through the stuff that I'm into the market as of this week and as of the next week. What I will be looking, of course, I will be looking for other markets, but these ones are the ones that I chose to make videos about because are the one that I'm currently with a position open. So let's take a look on some of those. I actually just chose the euro against the Australian dollar, which I didn't make a video about, but wasn't that specific because there wasn't really something important to tell. But now that is going against what I predicted to be, that's a good chance for me to show what I usually do if something goes wrong. So I go my daily task is go to the flux, see if something moves differently than it's supposed to. And what I can tell is actually that we've been recently very high on the Australian dollar, and as well we are looking for more bearish markets on the euro, which means for me that we can probably see some more short market on the upcoming future. And as well, that tells me also here in a graph, which is a nice visualization of checking how much, so we can technically see that the market is being very much valuable at this time. But that doesn't tell me that it's gonna crash. No, it doesn't tell me at all. It can go up as well as it can go down. That doesn't matter. The only thing I'm doing here is trying to increase my odds of success based on data that I have. With that being said, I have a good amount of data telling me that the market is looking for a more bearish, since we have a very long actually since the beginning of since the November of 2022, and now we are back again to the bearish area as well. That means anything. It can mean that market still can go up, or market still can go to the more bearish. We have a tendency to see that when the market is up that much, we have a more bearish market on our upcoming future. But since it's the market, since it's something that it cannot be predicted, it can mean I can go up or I can go down. It doesn't matter because it's the market. It's not going to respect what you do, and there is no such thing as someone that can predict the market very well on the short term, or in the future it might be different because of lots of different variables. So with that being said, I open this position only based on the fact that they are both markets, as well as the euro and as well as the Australian dollar, are very high at the moment. So they are very valuable at the moment, and they can probably start to move in a different way based on data. So I just choose a point that I think that it's interesting for me to say, look, those are my trigger points, look, the market can do something around this area because of past analysis as well. So with that being said, I can see there's some confluential over here, but it wasn't very much what I was looking for. I was looking for somewhere that the markets can go to make more liquidity and then starts to move my way. Didn't happen, and actually not because it didn't happen, but because it's moving against what I think. It's not really that much. It's about what I think this is probably about 0.7, yeah, 0.23. So that's not much. That's not much at all. And as well as we can hedge this position just in case, and we can make it the loss a little bit lighter than it would be if I just put a stop loss over here by hedging, of course. So with that being said, let's forget about the Australian dollar against the euro, and let's focus on the market that we did open and we did make videos about. So first, let's just continue with the forex. We are on the euro against the Great British Pound, and we can see that actually the market starts to move in our position, which is really good. It's something that's normal, happens. But if it didn't, we can do the same. We hedge it, and then we see if the market is going to close somewhere around our the closest we can get for the market to be more light on our losses or profits as well, because most of the time I am wrong and I still make profits out of it, so that's good. All right, so now that we see the euro against the Great British Pound, let's go back to the flux, take a look on that. It's actually also telling me to move a little bit shorter, not because of the Great British Pound, that's something else. It's just because we have here a very high volatility on the euro, and I'll start to going down, same as the euro against the Australian dollar. So I'm based on that because we have much more fluctuations on the euro against the fluctuations on the Great British Pound. That's why the one who commands the market is more the euro, and that we can actually see here for the graph. So yeah, so that tells me might have some positions to go shorter this time, and I did that, put somewhere where my price is going to say, oh okay, this is a good price to tell to move down, and we are looking at it right now. Actually, it happens, it's good. Doesn't mean that I should focus on this like, oh, okay, it's good, it's probably gonna go move against me. No, if it's good, we're good, we're going away, we're going with it. And now what we need to take a look is the gold, which is the more interesting one, which is the one that started to do some start to worry me, actually almost catch my alarm to do the hedging position. Fortunately it didn't, and it started to moving on the price that I wanted, and now we have just a little bit of profit waiting for this upcoming week to see how the market will do. And it's good because the flux compound I don't really need to do on the on the euro on the metals, because they are on one market only, so they are not one against the other, they are just one market, and that's pretty good. So in here I can actually take a look on that and see, wow, okay, the market is it's an upcoming trend up. This fuel last week, and now we can expect it to move a little bit further. Actually, this market is now on the very position to be bought more, so I will not be staying on the gold for the next week a lot to the short side, because on this last Friday we had 75,000 fluctuations more to the upside than we had to the downside. So that tells me someone is trying to push the market more to the upside, and yes, that is can be visible around here since the day 17. So this is the day 17, boom, it's all the way up right now. So I'm just looking to get a liquidation of this one. My position is already in, no problem at all, and liquidity somewhere around here now, and then starts to move up again. But since we're already high, it's enough to tell me that for about until Wednesday or somewhere like that, that's where I'm predicting it to be, we will be actually it will be fluctuating more to the bearish market. That's what he's telling me right now, and the oil is something that I've been just studying, and I will be done. We'll be done with the study. Actually, I will try to post a video about the oil as well, which is the same thing. It goes the same way. It doesn't really matter if it's shorter or longer. The oil works the same way as all the other markets. The forex is the one that is more difficult to read because you have so many variables and it's two different markets trying to collide with each other. So that's the only issue with the forex. That's why I consider more futures and commodities to trade, and because they give more money as well. So with that being said, thank you very much for watching, and I'll see you next time.